Everybody, what is going on? It is Crypto Bobby. Hope you are having a great day wherever you are watching in from, and welcome to another episode here of Crypto Happy Hour. I am very excited here to announce I have a special guest on the line. With me is Ari Paul. How's it going today, Ari?
Doing well. Thanks for having me.
I appreciate you taking the time to join. And for anybody who might not know your background personally as it comes to just general professionally and then how you got into crypto, a quick overview there I think would be very helpful.
Sure. I'll keep it really brief. So I was a trader at Susquehanna International Group, acting as an options market maker and portfolio manager for things like commodities, FX. And then I was at University of Chicago Endowment for 4 years as an asset allocator, so kind of longer term investing. So I think in my background is kind of the two opposite ends of the investing spectrum: very short term trading and very long term asset allocation, risk management, that kind of thing. I got into the space. I'm not an OG. I first started buying early 2014. And it really took me a couple of years to really wrap my head around it, be totally convinced, and go all in mentally, financially, and then ultimately kind of leaving Chicago to launch BlockTower.
Awesome, and appreciate the introduction there. And I've heard a couple. You've kind of made a few different rounds on some different TV shows and things like that. And one of the I think more maybe interesting things that at least in my mind that you've said previously was just your explanation of the prominent use cases behind cryptocurrency. And I would love for you to provide just an initial overview as far as what you feel like are the most prominent use cases for cryptocurrency.
Sure. So we're in this interesting space. I think if your listeners are not familiar with the Gartner hype cycle, it's worth Googling Gartner hype cycle and kind of pulling up the chart and looking at it. So the idea of the Gartner hype cycle is that most new technologies, there's this kind of very common phase. So first, people learn about it, they get really, really excited, and you see this explosive interest and hype that often is transmitted to asset prices. So that might be like the kind of hype of 1998, the internet boom, or maybe where we are with blockchain. And the idea is that at some point, people are disappointed because engineering takes time, and user adoption takes time, and getting good user interfaces takes time. And it doesn't happen as quickly as people hope, and so there's this kind of disillusionment. And then you get a second wave as the fundamentals again kind of do prove out to be promising, right? The internet was world changing, railroads were world changing, and cryptocurrencies world changing. So I think in the crypto world, there's a few different. Each use case has kind of its own hype cycle. So 3 years ago in Bitcoin, I was going to be able to buy Bitcoin next door, and that was part of the reason you had the great bull market in 2013. It seemed like Bitcoin was really taking off. It was like, it's happening, guys. The whole world is going to use cryptocurrency, right? And it turned out that it was far, far too early. You didn't have good security solutions. You didn't have, for example, very few people were using hardware wallets. And so hacks of exchanges were very common. You didn't have good user interfaces. And it just takes time for people to wrap their heads around these ideas. So I actually think that the use case of what I think Bitcoin is really trying to be primarily, which is a store of value that is judgment resistant, I think we're actually on the right side of the hype cycle, which is to say, Bitcoin had its boom and bust. It had its period of disillusionment. And I think the world is actually now adopting cryptocurrency for that store value use case. The other use case that I think is probably around the same place is as payment rails. So obviously we have, the huge scaling debate of how, I thought Bitcoin's supposed to be P2P cash. I thought we're supposed to use it for coffee, but fees are too high because blockchains are horribly inefficient as payment rails. But I think, again, we're kind of on the right side of that. So decent scaling solutions are right around the corner, right? Whether it's sharding in Ethereum or whether it's Lightning Network or some other layer 2 solution, it looks like we'll have something good by the end of the year. And it could even be something different from blockchains entirely. Maybe someone will actually figure out how to make a DAG work. Everything else, like literally every other use case, I think is on the wrong side of the Gartner hype cycle. So you think about if someone makes a really awesome decentralized application, how many people around the world are going to be using it the next day? It's a little bit like in 1995, there were a couple websites that tried to do e-commerce. They tried to sell clothing over the internet. And the problem is you only had 50 million people using the internet. And of those, very few people were willing to use their credit card, right? It wasn't viewed as trustworthy. So we're in the same place with crypto. There aren't that many people who are willing to, use MetaMask or go through whatever steps they need to use an Ethereum app. It's a very, very small potential user base. And even that user base, a lot of people are not willing to necessarily trust a new dApp with a large amount of money for good reason, right? Because we've seen that smart contracts can be fatally buggy.
Sure.
Sure.
So short term, it's really store of value and payment rails, and I think we're going to see continued adoption very quickly over the next 2 years for those two purposes. And then longer term, meaning 5 years, sky's the limit. So I do get sci-fi-ish with this. I'm a big believer that we're probably going to have people working for DAOs in 5 years. Things like an example that Olaf Carlson Wee uses that I like is the idea of a car that owns itself. And for example, you can imagine a self-driving car that's navigating through traffic and is negotiating with other cars for basically who gets to jockey for position and travel faster, where you might have like an instant bidding process, and maybe the car is renting itself out and optimizing and marketing. So kind of those more sci-fi areas, when you have the intersection of blockchain plus AI or blockchain plus big data, I do think you're going to see kind of every crazy idea people have come up with of how blockchains and crypto may get used. I just think it's going to take a lot of time.
Yeah, absolutely. It's interesting to see how quickly things can develop and kind of the process that it's going down at this point. One thing I think a lot of the people that are watching would be curious about is, as somebody who's gotten started into, like you said, kind of buying your first crypto and at some point 2014, and obviously having a lot of success in the industry in the past year or so now. And sorry if anybody's watching as far as the mic goes, I have couldn't find my wired headphones, so I'm using these Bluetooth headphones, and they're just all over the place. So apologies if you're getting any technical issues there. Hopefully that's better at this point in time. But as far as how somebody can really gain the knowledge to be successful or just increase their capacity when it comes to personal investing in cryptocurrency, is there anything, whether it's just basic understanding or books or anything like that, that individuals can do to have a better degree of success with that?
I think it really depends what you're trying to do. So the challenge with cryptocurrency is I think it was maybe Naval Ravikant's line that it's like a graduate level 400 course in a university, which is to say it's not that it's necessarily that hard or that advanced. It's that it has all of these prerequisites in different fields. So, it's got cryptography 101 and engineering 101 and computer science and maybe political science, because regulation is a huge element that I think about in terms of how to price different assets. And economics and portfolio management and trading. And, so it's this huge kind of wide breadth that you need to have some level of confidence that you're actually investing well. So I think it's actually kind of read all of it. So if you've never read any behavioral finance, read a little bit of like Richard Thaler, or there's a book, How We Know What Isn't So, by I think Thomas Gilliard, if I'm pronouncing his name right. Just a really good introduction to behavioral biases, which is an absolute cornerstone if you're going to be trading or investing. Sure. On the engineering side, there's starting to be some resources. MIT has a blockchain course in their open courseware. Jameson Lopp has a popular website that has just a massive list of Bitcoin resources.
The resources are great there. That's fantastic. Yeah. I'll post a link to that in the comments afterwards. That's one of the better websites for sure.
But I think a huge thing to understand about crypto right now is it is the Wild West. It's heavily manipulated. It is also, the value comes very much from storytelling. So much of cryptocurrency is so early stage that the narrative, Ethereum will have gone for years before even really attempting what it's supposed to be, which is the virtual machine of the world, right? So much of a venture capital style investment, at least for its first 3 to 5 years, is really the story that they're telling. Is it valuable? Does it make sense? And is it a credible story? So how do you determine that, right? Because you don't want to fall for kind of a scam where someone just writes a good couple paragraphs. And the answer is talk to the insiders, is get to know the best and brightest, talk to the best developers. I can't emphasize that enough. So go to your local Bitcoin and Ethereum meetups and try to get to know everyone. And talk to all the smartest people in all the different areas. So that's both smartest investors and developers and academic cryptographers and industry leaders, service providers, whether it's like BitPay, Zappo. I think that's the single best way to learn.
I tend to agree with that too. I think it's, at least for me, it's been really difficult to try to figure out as much when I'm doing research. I don't have as technical of a background as a lot of other people out there do. So when I am doing research on that, it's tough. And a lot of that, at least the success that I've had in any of that, has been just crowdsourcing that knowledge. So I think that's really solid advice. One thing that, too, just from a couple past discussions and even hearing people mention just as far as your experience goes and the way you've broken this down, when you look at alpha and beta in relation to crypto investing, for somebody who's newer to the space, how would you break that down how would you break down really the difference there at a high level? And is that something you could dive into a little bit more?
Sure. So first, just the concepts or the terms for people who aren't intimately familiar. So the beta just means your exposure to some market. So typically, we're talking about equities. So if you have a beta of 1, it means you're, for example, 100% invested in the S&P 500. Obviously, so beta could refer to a different market. It could mean you're investing in global equities or U.S. bonds, or it just means your exposure to some benchmark, to some market. And alpha is your return on top of that. So if my beta exposure to U.S. equities is 1 and it's up 10% and I'm up 15%, my alpha is 5%. So the challenge in cryptocurrency is it's not clear what the benchmark is. It's not clear what the index or the market is. 2 years ago, I think it was pretty clearly Bitcoin, right? So your choice as an investor in cryptocurrency was basically, well, I could just passively invest in Bitcoin. I don't need to hire someone to do that for me. I don't know, that's a kind of easy default choice. And if I'm able to beat Bitcoin, then I've earned alpha as a trader, as an investor. To me, it's much less clear now because Bitcoin's only 32% of the total network at this point. And let's say I'm not predicting this, but let's say there's a flippening this year. Let's say Ethereum or Ripple. I mean, Ripple surpassed Bitcoin in network value, right? So it may be that in 6 months or a year or 3 years, Bitcoin is 10% of the network and maybe Ethereum is 20%. And then maybe people will say your default option should be the top 5 or the top 10 crypto assets. I actually really don't like that now. So I think a lot of people are going to lose a lot of money on passive indexing in the space. Sure. Because in the S&P 500, the top 10 companies or top even 500 are mostly pretty legitimate, profitable companies. In crypto assets, you can have an outright scam in the top 10. You can have protocols that don't work at all, right? You can have very easy manipulation. And so if an investor says, well, how did you do compared to a benchmark of the top 10? Well, it's like, I really don't care. Like, if I know that a crypto asset is an outright scam and the price is heavily manipulated, I'm not including that as investable. That's not an option, right? That's not especially if you're at scale. So as a small time day trader, you might be able to ride a scam. You might be able to say, okay, well, I know it's pump and dump, but I'm still going to buy, early and sell to some sucker. You can't do that as a larger investor because you're just very likely to be the sucker. There's not enough liquidity. And not to say you even want to do that, but it's really not even an option. So yeah. This is a long-winded way of saying it's not clear what the beta is in this industry. And I don't have a strong opinion on what it should be. I don't think there's a right answer because this is not an area let me posit an idea. It may be that 90% of all the cryptocurrency value created accrues to one asset, to Bitcoin or to Ethereum or to one thing. I'm not saying that'll happen, but let's just say hypothetically, right? In that case, this is nothing like equities, right? There is no top 30 index. It basically means you're either going to own that thing that becomes a $30 trillion asset or you missed it. And the more you own of it, the better you're going to do. We don't know that that's true, but that in hindsight, your benchmark will have been that one thing, right? Whereas if we have more of a plurality world where, like the S&P 500, where you have hundreds of companies that are all pretty big and competing in different niches. So for us, the way I think about it is it's a little bit Bitcoin because Bitcoin is still front of mind for people. It's still the easiest asset. It's a little bit of a top 5 or top 10 index. There's definitely some element of that. Bitcoin sits flat and everything else in crypto goes up 5x. No one's going to be happy that you earn 5%, right? They're going to say, well, you could have just been a monkey with a dartboard, invested in anything else and done really, really well. So it's some mix of Bitcoin plus a top 10 or top 20 is how I think of kind of our beta. The beta meaning the benchmark.
Sure. And you've talked about this a few different times, and I've had some conversations with other people, and it's something that, at least in my mind, has kind of fascinated me a little bit as far as institutional investors kind of diving deeper and deeper into cryptocurrency. And it seems like it's either a very surface level conversation right now or just kind of at the initial out stages so far. How far along do you feel like I guess maybe I'll preface the question. Do you feel like institutional investors have an interest in investing in cryptocurrencies? And if so, how far along are they at this point in time in terms of doing that diligence and actually starting the process of potentially investing?
So they're all looking at it. All the big banks have started publishing research. They're all talking about it. the single biggest issue is custody by far. So U.S. pensions probably legally cannot invest in cryptocurrency right now because there is no good custody solution that's actually trustworthy in the sense of tested. So I'm not saying, for example, that Coinbase or Gemini or Kingdom Trust are not trustworthy.
For anybody who's not too familiar with what cryptocurrency custody is, can maybe you break that down as well?
Sure. So the technological challenge is how do you store your cryptocurrency in a way that no one can hack or steal? That's kind of the easy part. At least for most crypto assets, for example, I believe there's no known theft from a nano Ledger S at the hardware level. Like no one's ever compromised one, to the best of my knowledge. So using a hardware wallet and as long as you there was a vulnerability found in the Trezor a while back, but it required physical access to the Trezor. So if you've used Trezors or nano Ledger S's and you stored them in a bank vault, to my knowledge, no one's ever lost a dime doing that. The raw technological side is not that hard. Use a hardware wallet, store your private keys yourself. Where custody is hard is more from the operational or even legal sense, which is, well, who actually owns the asset? So if you're a pension, let's say you're $1 trillion pension and you buy $10 billion worth of Bitcoin and you store it in a nano Ledger S, well, who gets to have the pin to that, right? Who has the seed backed up to that? And so you can create you can do what a Zappo does or Coinbase or any exchange, and you have this big operational infrastructure of a whole, it's a mix of technological protection, so a series of passwords that are needed, and operational. So it's in a vault, and you need 3 employees who each have a key to be there at the same time, and there's video cameras and security guards. The problem with all those processes is as a third party, there's no way to know that they're actually doing them. So Zappo could walk me through their underground mines. As soon as I leave, they might be doing some different custodial process. It's impossible for me to have actual confidence in how those assets are being stored. So if you're a pension, the pension can currently trust a fund manager who just has the private keys. They could trust one employee, or they could trust Zappo, or they could trust Kingdom Trust. But at the end of the day, it's still trusting basically, an individual, someone's running that process, right? So I think what fixes this is first the technology itself. So one key piece of this is if you can do multi-sig, that's helpful. And as we've seen with, for example, Ethereum multi-sig, it's been disastrous, right? It seems like until recently, you should not have trusted anyone, including the co-founder of Ethereum, to be competent at coding a Ethereum smart contract to store substantial amounts of money, even his own money, right? So that will change over time. The way this tends to work is new code is often buggy. You gain confidence in it by penetration testing, bug testing, bug bounties, and over time you become more confident that the code is secure. So there's the code element and then the operational element, but the key piece will be insurance. So when Kingdom Trust or whoever has, when they add third-party insurance, that's when I think pensions will be getting in. Before that, endowments will probably get in small size in the next 6 months. So the short answer is institutions are all looking at it. I am confident they will eventually get in. It's not going to be super fast. It's not going to be overnight. Right now, the people who are in are big family offices, sovereign wealth funds are tiptoeing in, and indirectly. So you are seeing, for example, VC funds. So pensions and endowments are invested in firms like Sequoia, Andreessen Horowitz, Union Square Ventures. These are the top-notch venture capital firms, and those firms are all investing heavily in cryptocurrency.
Gotcha. And outside of the maybe lack of custody services that are really capable of handling the needs of some of those large scale institutional investors that you'd mentioned. Curious about liquidity as well, because going back to the example they used, if you buy one of those, like you said, if you buy one of those cryptocurrencies in the top 10, top 15, maybe you ride that up, and then if you are a large scale investor, there's not a fantastic way to offload that to lock in any profits without setting up a cascading effect. Do you feel like the liquidity, I know it's obviously made very big inroads over the course of in the past 6-8 months, but does that affect the way large-scale investors look at cryptocurrency as well, just due to the lack of liquidity in comparison to maybe markets that somebody like yourself was more familiar with initially?
Definitely. So first, there's a question I get very, very often is there's no way to get out, right? So people will say, hey, it's great that you think on paper you have $100 million in Bitcoin, you can actually sell that, right? And the numbers, the exchange volume would suggest it'd be very, very easy to, right? So Bitcoin, we see numbers of $10 billion a day in exchange volume. The truth is somewhere in between. So the $10 billion a day is not real in any meaningful sense. I think some of it is wash trading. Some of it is, a lot of it is just momentum traders. So what that means is that in most markets, in say equities, you have both short-term market makers. So you have people who are collecting kind of bid-ask spreads, who are fading any move as kind of algorithmic mean reversion traders. And then you also have fundamental traders who act as market makers. So for example, if Microsoft sells off enough, Warren Buffett will come in and buy it. And that might be a pretty wide range. It might be Microsoft might have to fall 50% before Buffett gets interested, but at some point you have fundamental people who get it. In crypto, you really don't. Right. So it's almost the opposite. It's so reflexive. As Bitcoin goes up, it attracts more interest and more confidence, and it produces more positive press headlines, and you actually have more buying. And as Bitcoin sells off, it's always accompanied by negative headlines. That's how media works. They'll find negative things to write about. And it produces a lack of confidence, and there is no fundamental value, right? So obviously, I think Bitcoin is valuable, but there's no number, there's no price, there's no with an equity, you can talk about like liquidation value. You can actually come up with pretty concrete numbers and say, at some price, I could literally take Microsoft through bankruptcy court and make money, even if I had to liquidate their office chairs. Whereas with Bitcoin, there isn't really a price like that, right? We can try to come up with some kind of value range, but it'd be extremely wide and low confidence. So because of all this, crypto markets they exhibit what's called serial autocorrelation, meaning it's not a random walk. If crypto is going up, it tends to continue going up. If it's going down, it tends to continue going down. And a lot of that volume, if someone starts buying meaningful amounts of Bitcoin, every trader on the planet sees it and runs ahead of them and runs the market up. So there's actually very little liquidity. Now, if you want to do $100 million in Bitcoin, you could get it done in a day. You'd probably pay a few percentage in slippage. If you wanted to do $500 million, you might give up 7% in slippage. These are kind of super rough guesses, assuming the market wasn't like teetering on edge and you didn't push it over. So for most funds in the space, it's not Bitcoin is viewed as liquid. If you're a sovereign wealth fund looking to buy $10 billion of Bitcoin, well, that is really, that's kind of good luck. But on the smaller assets, it's a huge issue. So Bitcoin is starting to look like a financial asset. You have the futures, you have LedgerX options, you're starting to get market making in it. If you look at smaller assets, something like Augur or Golem or kind of anything between, call it number 25 and 100 in terms of the coin market cap list, there's shockingly little liquidity. So you'll have an asset that looks like it's worth $500 million in network value. And if you wanted to buy 1% of that, if you wanted to buy 5 million, you might actually move the price of that market by 20%. And similarly, if you want to sell 5 million, you might cause it to crash 20% or more. And so that's a huge challenge and a real an issue from 18 angles. So here's one example of why this is an issue. If you're an investor in a fund that collects carry at the end of the year, and you've seen all these assets run up, they haven't sold anything, the fund gets to calculate their earnings, their carry, based on mark to market at the end of December 31st. And so people may have a very legitimate concern that basically, are those prices real? Like, to use a comical example, Dentacoin rallied from $20 million to $2 billion. But you couldn't. But it's not like you could have sold anything at $2 billion, right? As soon as people started selling like $1 million worth, it crashed back. It crashed by 90%. So imagine there was a fund invested in Dentacoin, and they say we're up 100x, right? We've earned this insane return for our investors, and we deserve to be paid based on that. But then it may turn out just a couple weeks later that Dentacoin crashes 90%. The price wasn't real, all that. So that's a legitimate concern that investors kind of sometimes raise. And then just the idea of eventually you need to liquidate things, right? Eventually you're going to want to take profits. And from a risk management or an active trading perspective, it certainly hampers things. Totally.
And one thing you had mentioned before, as far as kind of Bitcoin actually looking like, in some respects, a real asset class now, was the LedgerX, CME, CBOE futures. Can you talk about how you feel like that has affected the market for Bitcoin, positive, negatively, any way in particular? I'd be curious to have your take on how you view the futures market, how that's affected Bitcoin.
Sure. I don't think it's affected it very much. So if you look at the volume, it's been about very, very roughly $80 million a day each on CME and CBOE. The LedgerX options have basically not traded. I mean, tiny, tiny volumes. Certainly the futures are not, they're a tiny percentage of the market. And for the most part, they don't seem to have been moving things. So most of the futures have basically traded in line. They've traded at the same price as the underlying. Sure. And some of that is there's arbitrage by market makers. But what that suggests is, I'll contrast it with, say, South Korea. So there's a little bit of arbitrage between South Korea and the US. The reason the so-called kimchi premium, the South Korea premium in crypto prices, can persist for so long is it's extremely hard to arbitrage because of capital controls. You can sell Bitcoin in Korea and receive won, but you can't take the won out of the country. There's a $50,000 worth of won limit per Korean, and no company, no fund has figured out a way to get around that at scale in a legal way. Or even in an illegal way, or because if they had, you would see it. You would see that that spread would not have persisted the way it did. So one thing that is worth looking at is when South Korea prices are trading way over U.S. prices and prices as a whole are rising, you can kind of infer that it's South Korean buying that is dragging the complex up, right? And that might be useful information. So in Bitcoin, we had that very briefly. Right when the futures launched, the futures were trading at a major premium. They were trading at about a 10% premium. And so the futures, you could think of them as dragging up the price of Bitcoin. But that was only for a few days. And since then, the futures have not really moved things. So far, I'd say the futures have not played a big role. I think they will over time. Over time, you're going to see more and more prop shops, hedge funds, passive allocators start using the futures as as their primary vehicle. As institutional money gets in, a large percentage of it, I don't know what, I'm not saying the majority, but a meaningful percentage of it will use the futures because it's so much more convenient in so many ways. With the futures, there's basically no counterparty risk. You don't have to worry about security or custody from either a regulatory or like risk of loss perspective. And it's just so convenient in the sense that if you imagine a traditional hedge fund right now, they already have a futures account. They have a fund administrator who does their accounting and their bookkeeping. All of that, a Bitcoin future is just another future, same as a crude oil future. So they're ready to trade and act. Whereas that person goes to their fund administrator and says, hey, we want to buy some physical Bitcoin. We have no idea how to handle that. We don't know how to handle it from an accounting perspective, a regulatory, it doesn't fit into their systems. They don't know how to do an audit. So I do expect it to play a bigger role over time.
That definitely makes sense. And I think on the end of, like you had said, there's so many unknowns around how to handle the actual underlying asset that the futures make a ton of sense there. One thing to think about, I guess, in the respect of the I'm kind of looking at was when you in the past had mentioned something about Monero. And I'm pretty fascinated by privacy coins in particular, the use case around privacy coins. I would love your take, not necessarily Monero specifically, but just privacy coins in general, what you think kind of the overall use cases or the value behind that use case. I think that would be really interesting to hear about.
Sure. Yeah. So back to that idea of kind of the Gartner hype cycle and the uses. So the two that I said are currently kind of real are store value and payment rails. And those two, I don't mean there is overlap between them. I'm not saying they're like separate coins necessarily. So storing your value anonymously is kind of a added feature. For some people it's a bonus. For other people it's absolutely critical. And similarly, transferring value, whether you transfer it. Bitcoin is only, of course, pseudo-anonymous. Law enforcement loves Bitcoin. So transferring it anonymously, there's huge fundamental demand for that. So I say sometimes that this is not entirely accurate, but I'll say that there's 3 cryptocurrencies today that are actually used at all. So Bitcoin is store of value, Ethereum is a crowdfunding tool, and Monero for darknet purchases and WikiLeaks donations. That's obviously an oversimplification. There's certainly other ICO platforms now. There's other competing stores of value, but that example is meant to highlight just how little cryptocurrency is actually used, right? So Monero is currently one of the very few cryptocurrencies that is actually in use. There's real demand for it. We see, we can't see the transaction volume because Monero is anonymous. But we can get some rough idea. For example, there are academics who look at all the darknets and try to estimate that volume from various ways. So yeah, I mean, privacy is like a basic human kind of need and tremendous demand. One point I'll make that I think is valuable. So Zuko Wilcox, the creator of Zcash, will often emphasize a really important point. So you often hear people say things like, people who are anti-privacy will say things like, oh, only criminals want to do that. Only, the only people who would want to use this are people with something to hide. And I would hope that we would kind of feel that that's nonsense. But a point Zuko makes is privacy is not about anonymity. Privacy is about selective disclosure. So the idea is that there are things that are not a secret about me that I don't necessarily want everyone to know. I want the ability to tell a family member, to tell a friend, to tell some circle of people but I want to have that ability, right? It should be under my control to disclose certain information. And so you think about this even in the financial sector context. So JP Morgan, this was maybe 9 months ago, inked a deal with the Zcash company to integrate or to explore ZK Snark technology for their financial records. And that sounds really weird, right? Like, well, why would JP Morgan want the most anonymous technology on the planet? And the answer is not because JP Morgan wants to hide things from everyone. It's that JP Morgan wants to protect their clients' information and have the ability to only selectively reveal it to the appropriate regulators.
Sure.
So basically privacy is non-binary in that sense, and a tremendous basic human need.
I think too. I was having a conversation last night with somebody who was talking a little bit about chain analysis and some of the things that they have going on with Bitcoin, and having seen that in action, where there's basically have a map out of all the nodes and some pretty incredible things that are gone on that just really remove any level of privacy within, or any notion of privacy within Bitcoin. And I think as Monero, as Zcash, and potentially some of these other ones, but I think Monero and Zcash, really specifically Monero, seem to kind of be in the lead as far as people actually utilizing Monero for its intended purpose of privacy. But I do still think that's, at least in my mind, one of the more fascinating use cases for cryptocurrency, and will probably continue to develop as things like chain analysis and the government and all that type of thing continues to become more prominent in terms of actually placing you and your Bitcoin address as the same individual.
Right.
One thing too, so I'm looking at, I have a kind of a tweet that you had brought up, it's maybe early February, and you had referred to a dinner that you had with Ripple developers. And I think at one point in time you had talked a little bit about the price of the Ripple token, and then just referring to the fact that you had literally nothing but respect for the developers. And I think that's kind of like an interesting topic, because I feel like there's a lot of individuals just within the cryptocurrency markets in general that seem to take any criticism of price of any asset, not necessarily Ripple, but of any asset, as a direct attack at individuals. I'd love to hear your take, because I thought that was a pretty interesting point where you had mentioned the respect that you had for the Ripple development team.
Sure. Well, first is people, I mean, the economic stakes are becoming gigantic, right? I mean, the Ripple company at one point had $60 billion of XRP tokens on their balance sheet. And if an individual has millions of dollars or an asset, it's not absolute, right? If an individual has $10,000 of Ripple or something else, and that's all of their money, they're going to be very offended and hurt, and they're going to be, there's a great line from Charlie Munger, who's Warren Buffett's partner. Charlie Munger, unfortunately, does not see the value in cryptocurrency, but he's he's otherwise a phenomenally wise individual,
or something like that.
He's toxic, I think, or noxious.
Noxious, yeah.
That's regrettable. But Charlie's a brilliant guy. I would highly recommend reading everything he's ever written. And one point that he makes repeatedly is, however much you try to appreciate the power of incentives, you will still underestimate their importance. And the idea is that if you, let's say you have an employee and you create their pay systems such that they're incentivized, they're paid according to some axis, according to, what would be a good example here? Let's say it's a salesperson and they're rewarded by volume of sales. They will find a way to justify whatever they need to do to maximize that number. Mm-hmm. So there's an idea that it's same if you have a scientist who's paid for by oil companies or whose grants come from some political group. They will, however honest they are as people, regardless of their integrity, it's such a powerful incentive to interpret data in a way that is beneficial to keep that gravy train going. And the idea here is that you have to separate it from ethics. It's like people's incentives just end up overriding their everything. So we're now talking about big money, right? We're talking about powerful incentives. And I'll justify it in one other way, though. Price matters in this game. So to the extent you think that there's an existential fight, Bitcoin's trying to conquer the world in the face of, say, more centralized powers, and then you have a more centralized coin, whether it's Ripple or something else, price actually matters, because the higher the price of something is, the more price is strength in the economic war between cryptocurrencies and eventually between cryptocurrencies and potentially central banks or closed systems. And so there's this view that if someone if someone spreads bad rumors and it takes 30% off the price of Bitcoin, that's actually like a wound to the Bitcoin.
Yeah.
And if your goal is for Bitcoin to conquer the world, that's actually a negative development. With that said, my view is a little bit different. So it's funny, I'm pretty confident in, I actually like to think of Bitcoin as the honey badger. And if something like, whether it's another cryptocurrency or the actions of an exchange can actually kill the honey badger at this point, it deserves to die. Like that means it's not the honey badger. It's not what we kind of hope it will be. And I don't care which cryptocurrency wins. So I passionately want and really care about there being censorship resistant, judgment resistant store value, transfer value around the world as a defense against oppression. I don't care if it's Bitcoin that delivers that product. Right now, I think Bitcoin looks like the front runner, but if something better comes along that is a better Bitcoin than Bitcoin, that's fine. It'll serve the same purpose from my perspective. But with that comment about the Ripple developers, one, it's simply true. So, I mean, you have good engineers, good developers who are, just working hard and coding away and building a product that is usable and works and has features and is differentiated. And two, experimentation itself is good. So there's going to be a lot of there's going to be a lot of failed experiments, and that's great, right? So not every failed experiment is a failure. I mean, for example, you look at Bitcoin. Bitcoin was built on the backs of many failures. So you had BitGold and you had Hashcash, and those projects failed, but they ended up being a major part of the building blocks of Bitcoin, right? And were thus critically important and critically valuable. So even if I disagree with the structure, let's say I look at a cryptocurrency and I say, this is broken because the token economics make it worth zero. That doesn't mean the developers aren't adding value, right? If they're writing new code, if they're creating new cryptographic techniques, a new consensus mechanism, I can still really respect the effort and appreciate the effort, even if I think there's some element that makes it doomed for failure.
Sure. And I think that's a really interesting point, and I tend to agree with it as well. It's kind of separating the development that goes on with the value, and there's nothing specifically to, in my mind, I'm a lot of times I'll get briefed because I'll call something out in terms of potential overvaluation, and a lot of people that might hold that asset don't like me too much. But I think it's something that you kind of have to provide your opinion on a consistent basis. As we're looking, I think obviously things have developed even more rapidly in the past couple of months than they have previously. But is there any specific industry trends that are going on that you find pretty interesting, that you've seen kind of popping up maybe over the course of 2018 so far, that you're keeping an eye on as far as crypto goes?
Yeah, I think we're kind of in this really interesting gap period from a regulatory perspective, which is that you currently, at least in the US, cannot trade security tokens. So you can legally issue one. You can hold an ICO and register it as a Reg A plus or Reg D offering and meet every regulatory requirement. But there's no secondary market for it because there's no exchange that is legally allowed to trade those assets. So we're in this really weird space where, for obvious reasons, people don't want to issue a token that then is untradeable, that has no liquidity. So currently, you have to do a token offering, and you have to. And for many of these, it makes sense to say, well, we hope this is a utility token, that it's not a security. The problem is the SEC has refused to issue clear guidance, and they've said that they think. So the head of the SEC, Clayton, said that 99% or even all of ICOs are securities in his eyes. And whether that ends up being true or not in terms of how the SEC rules and how federal courts rule. It's a scary gray area for a lot of people who are issuing ICOs and people who are investing in them. And so we have this gap where there isn't really a clear legal way to do things. There isn't it's not obvious what you're supposed to do, right? And the answer might just be wait, just don't do anything. But that's obviously not a terribly attractive answer. So I think a big trend of second half of 2018 is going to be registered security token offerings. I think there's going to be from many angles. So some of them will be token offerings that are like gold or Microsoft equity, S&P 500 equity as a securitized token. Others will be more important or creative. So it might be a big company offering a new share class as a token. Others might be entirely new business models and projects. And what's going to be meaningful is you're going to have the first exchanges that are legally registered. So there's a project called Templum that is likely to be the first and maybe even the only for a little bit kind of legal registered exchange that will offer those trading in those.
I was actually going to ask about, your thoughts on, because we were obviously talking about securitized tokens, Templum, and then T0. I think Templum maybe is going towards, they're taking a little bit of a different approach, and obviously T0 is raising a ton of money, and Templum is not that far along. But I was going to ask about that, and glad you started to discuss it in a little bit more depth.
So I'm actually less clear on Templum's the project that I know best, and even that one I won't pretend to be an expert on. T0, I'm going to end up putting my foot in my mouth here, but I'm actually a little bit less optimistic about that. The way they're structuring things is a bit weird in the sense that you basically have to IPO. It's almost, I may be misunderstanding things, but I think it's almost like you're forced into all of the equity regulation. So it's actually, it seems less than ideal.
Yeah.
And then you have other projects like Harbor and Polymath that are not addressing the regulatory side at all, to the best of my knowledge. What they're offering is is the technological side, a smart contract wrapper that adds features and functionality to the token, but doesn't solve the regulatory problem. So maybe I should say Templum and T0 are kind of the two efforts to solve this.
Yeah, my understanding too, or I guess the understanding, just I'd spoken to somebody from Templum recently, and maybe T0's focus was a little bit more on securitizing kind of traditional public assets, kind of almost like replacing the New York Stock Exchange. And you can definitely correct me if I'm wrong. And something like Templum is more, if a hedge fund is trying to securitize, they're offering to provide liquidity to what they have, or something of that nature. And I think the use case might be a little bit stronger. Not that many, obviously there's probably some problems with the New York Stock Exchange, NASDAQ, and that type of thing, but not that many problems with liquidity there. But on the other end of the spectrum, Templum has a pretty interesting problem they're looking to solve, at least in my opinion.
Yeah, absolutely. So a key theme, I think, is going to be, I think it's probably going to get worse before it gets better with ICOs, in the sense that the SEC is going to go after more ICOs. They're going to go after, they may go after some funds. They'll go after some marketers. I don't think it's going to be draconian. It won't be the end of the world, but it's going to have a chilling effect, I think. And I think that's going to happen probably in the next quarter. And that's going to be this weird gap period where it's unclear how you're supposed to raise money and how you can actually do things. And then I think, kind of second half of 2018, especially the last quarter, we'll see this huge kind of blooming of these security tokens that are all regulated and proper, and that will bring huge interest from more institutional investors.
Yeah, it should be interesting to watch that play out. Excuse me, not payout. I'm definitely keeping my eye on that, and the SEC regulation I thought was, or the discussion around that. Maybe we could dive into that a little bit further as far as the kind of comments from the SEC and the CFTC. Was there anything maybe in particular that they had said that you found was kind of interesting or stuck out to you from the comments from either the SEC or the CFTC in which they made in the hearing maybe 2-3 weeks ago at this point?
I mean, I think the main takeaway that somehow kind of got lost in the noise a little bit with the reporting was they've really presented an extremely clear framework for the last 6 months, and they've been entirely consistent, which is the things that never ICO'd are not securities, and we welcome them, and we do not fear them, and we embrace them. So Giancarlo of the CFTC saying that he encourages his kids to mine Bitcoin, and he loves cryptocurrency, and and then the SEC saying just, we're going to enforce existing law. So, and the same's been true in South Korea, by the way. So you had some scary headlines like, South Korean authorities raided every exchange. Well, they were raiding it to ensure compliance with AML, KYC, that's anti-money laundering, know your customer type laws, as well as tax payment. They weren't attacking cryptocurrency. They were saying, these are fly-by-night exchanges. We just want to make sure you guys actually follow tax law and actually follow the banking laws, right? And obviously that's onerous. A lot of people in the cryptocurrency world don't like those laws. But the point is, it wasn't an anti-crypto sweep. It was we're going to enforce the laws that are already on the books and that we enforce with other exchanges, which is far more constructive than I think people interpreted it as. So while we're in this murky phase with ICOs, the regulatory atmosphere in the US and South Korea is extremely positive. Frankly, it's more positive than I expected for crypto assets as a whole.
Sure. And one thing that I think has been a hot subject of discussion, I don't know if this is something that you'd be open to diving into, just your overall thoughts on Tether. I'm seeing a lot of comments about Tether. I think a little bit of back and forth with Bitfinex and everybody's favorite Twitter personality or whatever Bitfinex might be. But wondering if you might be able to expand upon some of those thoughts, if you'd be willing to. If not, totally get it.
Sure. So for a very long time, I held off on wading into that debate because I honestly just didn't feel like I had anything worth saying. It didn't. I mean, if something's a hot button political topic and I don't have any special information, like why should I open my mouth? So I ended up opening my mouth because I was literally getting asked about it daily by investors, fund managers, and even the media. I was literally having like New York Times and Wall Street Journal ask me every day for comments on Tether. And I'm like, you know what, if this is such a hot button issue and I'm seeing such kind of stupidity on both sides and such outrageous claims, and maybe there's some value in me just saying like, guys, I don't know anything, but of what, here's the data I have, here's how I'm thinking about it. So I put out this, it was like a 21 tweet storm where I said, this is every conspiracy theory. This is the data we actually have. And this is how I'm interpreting it. And that's it. And I don't have the right answer. I can't tell you for sure if Tether is, but this is kind of the way I'm thinking about it. I meant for that to be the end of it. It's probably been a mistake for me to continue engaging with like Bitfinex. I'm actually kind of done. Like I think we've debated every point we could debate ad nauseum. So there isn't really any value in going further.
Sure.
But I'm a debater at heart, and when someone makes really, really clear illogical arguments, it's not even about whether he's wrong in his conclusion. It's just he makes these kind of outrageous kind of chains of reasoning that are so clearly nonsensical, and I can't help myself but say A does not follow B, right? So for your listeners, I'll give you the kind of like minute summary of the situation. So Tether is claims at least to be a US dollar collateralized stablecoin. It was an independent company, or at least somewhat independent company, before it was acquired by Bitfinex. The legal structure, the corporate structure is all very unclear now. We don't know who their banking relationships are. Initially, Tether was going to be audited. It has not been audited. Initially, recently there was going to be an audit that was called off. And so this raises suspicions by a lot of people of, is Tether a Ponzi scheme? Is it collateralized? There were accusations that veer, I would say, into conspiracy theory that maybe the printing of Tether was similar to Mt. Gox's Willy bot. So Mt. Gox in 2013 was probably responsible for a meaningful portion of the run-up of Bitcoin from $100 to $1,200. Mt. Gox was using an algorithmic bot to buy with fake money. So there's a concern, well, what if the rally from $800 to $19,000 was partly Tether being printed out of thin air and buying Bitcoin? So my view is, so here's my conclusion based on the very limited data that I have. Bitfinex and every other exchange has been insanely profitable for the last year. It's if Tether was a Ponzi scheme 6 months ago, they could have repaid it by now. And it'd be unlikely, it'd be weird for them to be running a Ponzi scheme when they have this incredibly profitable, legitimate exchange business. So that's one. My guess is they have the US dollars collateralizing it. Whether it's in a segregated bank account that's done properly from a legal and regulatory perspective, I have no idea. But Bitfinex and Tether as an entity probably have the US dollars to back Tether. Second, it's very unlikely that Tether has meaningfully moved the market. So one, the dollar volumes just aren't enough. You can't create $200 billion in Bitcoin network value with $1 billion of fake buying. I can't prove that mathematically, but as a trader, as an investor, it doesn't make sense to me. So the idea that fake money pushed Bitcoin up from 5 to 10,000, and then you had actual legitimate billions of dollars of buying at that higher price, and you're still going to call it manipulation, to me doesn't really make sense. So I'm pretty convinced that Tether has not moved the market in giant amounts over long time frames. That's kind of it. Like I can't, so, and if you don't want to use Tether, don't use Tether. Like, it'd be great if Bitfinex was audited. It'd be great if Tether was audited. Oh, one comment on that. So some people are like, the fact that they weren't audited proves that they're bad actors or doing something illegal. The reality is crypto audits are exceptionally hard, exceptionally time consuming, and no exchange, to my knowledge, has done it. And many have tried, and many have said they want to do an audit. But doing an audit will sometimes require one. There's very, very few auditors who know how to do it. There's literally a couple in the U.S. who will engage in it, and those they sometimes place demands that an exchange wouldn't want to do. So, for example, they might say you have to move your cryptocurrency out of cold storage to prove to us it's yours. Well, as an exchange, you really, you might be wary about doing that. But the bigger thing I think is that people don't appreciate you have all of these crazy amounts of crypto assets moving back and forth, some of which are inherently unauditable. So, for example, there's no way to audit IOTA because it's not a public blockchain. There's no way for an exchange to prove they had the IOTA that they say they had, except to move it. And if it was moved at some point in the past, proving to an auditor that you controlled the address it was moved to, I'm not saying it's impossible, but it's exceptionally challenging. There are all of these weird pitfalls that don't apply to auditing anything else. And auditing of Bitfinex and Tether is not about proving they have US dollars in bank accounts they say they do. So that's a mistake that a lot of people make. They say all they need to do is audit the bank account. But an auditor won't sign off on something like that. So this is the auditor won't just check a box and say, we just looked at a bank account, it had $1 billion, we're checking that box. The auditors, they're not willing to do that. If they sign off, it's a little bit like a lawyer who's like, they're very careful about what they put in writing. And so they're going to want to audit the source of those funds. They're going to want to track every deposit, every withdrawal from that bank account. And if any of those withdrawals they can't confirm, they may be unwilling to do it, or it may produce real challenges. So I don't know. I wasn't in the room when the auditors first engaged and then walked away. But it's totally plausible to me that the mere fact that they haven't been able to do an audit doesn't say that much to me.
Gotcha. It's a good breakdown. I mean, I think everybody has their own opinion, but I think that's a damn good breakdown. So I appreciate that, and I think getting clarification there, because there's a lot of people I think that prior to the discussion today, just when I asked on Twitter for some commentary yesterday, people reached out a couple different times about Tether. I saw some Tether questions in the live chat here, so I appreciate the kind of advance in your thoughts there. Looking like, so we're coming to the end of the hour here. Anything maybe that I didn't touch on in the discussion at this point in time that you would hope to cover? Anything you'd like to take up the last couple of minutes we have here for?
Sure. Well, I want to throw out one last sentence on Tether, and then I'll be happy to riff on kind of the political impact, I think, of how this may play out. So the last sentence on Tether is just, I'm not telling people that it's safe, right? I don't know. And even if it's fully collateralized, there's real regulatory risk. There's a risk that the U.S. government or another government says, this is they had some minor accidental breach of anti-money laundering laws, like every U.S. bank. Every U.S. bank gets fined every year for violating anti-money laundering laws, right? The U.S. dollar gets used by fraud. Criminals funnel money through J.P. Morgan. So it's very likely that someone has laundered money through Tether, and the U.S. government could use that to shut it down or seize it or fine them. So I just want to throw out there, I'm not saying that Tether, I do not think Tether is riskless. Tether has risk. It has regulatory risk for sure, and it may also have counterparty risk. Okay, so kind of putting that aside. So something that I think is a really interesting thought process that definitely, I'm not sure exactly how much, I'm not quoting The Sovereign Individual, but this is definitely inspired by the book, The Sovereign Individual. So I have to give credit where credit is due. Here's how I think things are going to play out, and they're actually playing out in real time right now. Cryptography is naturally defensive. What that means is it levels the playing field. An individual with a Raspberry Pi is able to encrypt a message that the NSA can't read. What we're seeing right now is countries that are outside the U.S. monetary system, like Venezuela, Iran, Russia, and China, are all talking about launching their own cryptocurrencies. Obviously, Venezuela, no one's taking that seriously, but China is going to launch crypto yuan. Like, that's a quarter of the world's population almost using a fiat cryptocurrency. And it's incredibly Orwellian. So it means that the government will have easy visibility into every single transaction in real time. And big data means they can actually analyze every single transaction that's happening in the country in real time. And they can censor it in real time. So once they do that, they're almost certain to ban cash. They'll ban anything that people are using as monetary units aside from that crypto yuan. So imagine if you're a political dissident in China, not only can China freeze your money, China can make sure that no one else is able to give you money. And they can do it with the flip of a switch. Now, what's the next step after that? So China's going to have to physically close their borders. Physically, they have to not let people leave. Because if they let people leave, what will happen is the oligarchs will leave with a meaningful percentage of their wealth in something like Bitcoin. And if you're China, you don't want to have 10% of your GDP leave the country in the form of Bitcoin. So you're going to say you're not allowed to leave the country. But borders are porous. Billionaires can always find ways to get out of countries. So then this is where things get really sci-fi. This is where people look at me like I'm crazy. So here's my 10-year prediction. There will be a war fought between an open and closed country over physical domiciling of crypto refugees. So what might that look like? So let's say Chinese oligarchs, a bunch of them settle in New Zealand. And New Zealand says, we're going to allow Bitcoin, Monero, we're not going to ban cryptography. And we know that means that you can hide assets from us. We know that means you're not going to pay your whole taxes. But it's fine, because if you're like Zug Valley and everyone who comes, in a huge percentage of your population are worth millions of dollars, you only need to collect a little bit of taxes to pay for services. Right? So if a billionaire comes to New Zealand, even if they only pay 1/10 of the taxes they should pay, that still covers their cost, right? So countries like New Zealand may say, hey, billionaires come here, we're fine with you hiding half your wealth or 9/10 of your wealth, right? Give us a little bit of taxes and we're still happy. And you guys are job creators and innovators and all that. So then what China does at that point is basically invades New Zealand. And what does invade mean? I'm not sure. Maybe it's cyber attacks. Maybe it's actually finding an excuse to physically invade. But I think basically right now we kind of think of the world sometimes as East versus West or liberal versus conservative. this is not liberal versus conservative. So there are totalitarian left-wingers and totalitarian right-wingers. For example, the UK is pretty liberal, but they're actually a pretty closed country. So they've somewhat made cryptography illegal, right? They just banned actually certain types of porn. And then you have other countries that are a bit more right-wing. They're right-wing in the libertarian sense. So they might be socially conservative, but they still say, no, everyone gets to have cryptography and own guns and kind of do their own thing. So I think what we're going to have is the world dividing into open and closed. And one defining characteristic of that will be how they treat public non-fiat cryptocurrencies or call it public ledgers, sure, as opposed to permissioned, right? And that is going to be a major dividing line of the world, I think, in 10 to 15 years. And you're going to see major physical conflict along that axis.
Yeah, I'm gonna have to take a minute to wrap the head around that, but that's it's a crazy thought process, and I think too. I mean, there's been, like you said, the Venezuela thing that's coming up right now that not a lot of people are taking seriously. It's still interesting, and even there was a tweet I think from like Jeremy Gardner recently where he was talking about having like dinner with some border agent where within literally the past 24 or 48 hours, where he's saying that if you because you can't cross the border with $10,000 in cash and you can't now do it with $10,000 in Bitcoin, they have the right to search your phone for Bitcoin, which I think would be a little bit difficult to do. But yeah, it's the bigger entire process is crazy.
Yeah, so right now there's border agents who are probably violating the law, and which border agents sometimes do. But the kind of law that could very easily be passed, it's not like we all know that you can't actually confiscate Bitcoin at the border. But what could be done, what wouldn't shock me in 2 years, let's say, is for the U.S. to pass a law that says you have to declare any cryptocurrency that you own whenever you cross the border. And that declaring obviously matters a lot, right? Because any money that you declare is at risk, right? So then the U.S. government can say, well, we're holding you for tax evasion, or whether it's true or not. If a central authority knows every penny that you have, if you're actually forced into declaring, and if failing to declare, let's say you fail to declare a dime of it, they can then lock you up for 10 years. Yeah. There's huge pressure, right? They can't force you to, but there's huge pressure to declare. It certainly makes it far less usable. It's a little bit like a lot of totalitarian regimes will do that. They won't confiscate wealth right away. What they'll do is categorize wealth. They'll say, oh, like tell us exactly how much gold you have, right? And that becomes pretty meaningful down the road if people try to flee, right? If people try to flee an oppressive regime. So it's scary to me. But the U.S. remains right now extremely liberal and extremely supportive.
Yeah. I think that, for the most part, outside of the ICO commentary, I've been pleasantly surprised with what I've heard from the regulators. So I've been happy about that. But yeah, the potential, like you said, is pretty crazy, and sounds like a bull case for privacy coins for me. But I guess, it's at this point in time coming up on the end of the hour here. So if there's any place that people could go to find you, would love for you to just kind of let people know where they can get your thoughts, on the markets, whether it's Twitter, if it's anywhere else.
Yeah, anything I do anywhere, I end up posting on Twitter under at Ari David Paul. So that's the probably best place to look.
Awesome. Well, I really do appreciate your time. Sorry to everybody for the microphone issues initially on my end. Apologies on that. But thank you so much, Ari, for joining this conversation. I hope you guys learned a ton. I personally learned a ton. So thank you so much for that.
Thank you. Thanks for having me.